or why need to get myself and my family protected during MCO? Now, many people nowadays, I mean, during this period of MCO, will feel that our future, our income is not secure, all right, and we might not be able to commit into a new policy or whatever. But just first of all, you need to understand and review your current policy, and this is very important because I do it for many of my clients online now. So we want to review your current policy. Try to review your current policy because we are actually currently in a huge risk of uncertainty of wealth and health pandemic of the century that never encountered by humankind before. Because even my mother-in-law, my parents, who are at the age of 70 plus, also never encountered this kind of big issues. It is not only the health pandemic, it's also the wealth impact. All right, it's on the wealth, the financial part, and also the health part. Now, this is leaving us a big risk of uncertainty. There are a lot of uncertainty during this period of time. We are not sure about the future. We are not sure about the economy. We are not sure about the financial impact. We are not sure about the health, even health condition, right? Because we are not sure when, or maybe some of us here might be impacted by this MCO, this COVID-19 as well. So that's why we are facing this kind of huge risk. So a huge risk needs to really cover, or you need to really cover yourself within this period of time. So you need to look at, because even insurance companies also, they are unsure of the situation and not easy to predict. And some clients, we have some clients who try to buy insurance from Malaysia, but then during that time, I think somewhere around January, during Chinese New Year time. So this client is a Malaysian, so he went back to China. In the mid of applying for insurance, insurance company turned down his, initially wanted to accept his case, but because he went back to China already. So during that time, China is a very high risk place. So that's why insurance company stopped the application, all right, cancel the application and do not allow him to. I mean, before enforce, they don't want to accept the case already. So you see, these kind of things might happen. We do not know what will happen to the whole global situation, right? So that's why insurance company also unsure of the situation and not easy to predict. And if COVID-19 patient, even though after you recovered, there might be some complication, so might not be able to increase your insurance policy in the future, right? So you need also, if things get out of control and many deaths would occur, this is the time when we need our coverage for our family members the most, okay? So first of all, review your current policy. I'm not sure if you are aware of what kind of policy that you have, but it's good that you dig out your policy now to understand what kind of coverage that you are having now. Because through our experience, many people, when we ask them, what kind of policies do you have, what kind of benefits you have, they say, I'm also not sure, and how much is the sum assured. So these are the questions that you need to understand, need to try to understand from your own current policy benefit. And first thing is, what benefits are covered by my policy? I'm not sure if all the participants today, you're aware of what benefits that is covered under your policy, right? So many of people do not know what is covered. They only think that, I think I have medical card, I think I have some critical illness, but how much would that be? Okay, so that's one thing, that what kind of benefit that is currently you're having in your policy, and how much is the sum assured. Many people, they have insurance but no assurance one. You have insurance but no assurance. What is the difference between these two? Many people, you ask them, you have insurance, I have insurance, but whether you have assurance, whether is it enough to cover, to sustain your family members living, whether it's enough to sustain your children's education. So these are the things that you need to look into it at this critical moment of time, because we do not know when is this thing going to happen to us, right? Especially during this critical moment. So your medical, what about your medical? Is it up to date? Because medical plan has now come to, I think, the 5th generation already. Since I think about 20 years ago, medical card was only offering 50,000. I mean, that time many people bought medical card. Annual limit is 50,000, lifetime limit 150,000. That's it. Okay, but looking at current situation, whether it's enough or not, all right, these are the things that we need to try to go and understand what kind of policy that we have. What about your life insurance? Your life insurance coverage, especially for breadwinners, if we are not around during this, because of this COVID-19 issues, So how much money that we are leaving behind for our family members? So this is also very important information that you need to dig up from your current policy. And also number 3 is maybe your critical illness policy. Critical illness, if someone is diagnosed of COVID, for example, and any complication related to lung or any complication in the future, all right? So what kind of coverage that you have for your critical illness? So just a rule of thumb, for your medical, at least you need a minimum of annual limit 1 million now. Right? You need an annual limit of medical card 1 million. I'm not sure if any one of you here have already upgraded your policy up to 1 million annual limit and lifetime no limit. This kind of package that is currently very popular now in the market. Right? You should go for this kind of policy for your medical, and also it's not expensive as well. Right? For people who are young, I mean before 40 years old. Another one is your life insurance. Life insurance, just a rule of thumb. At least 1 million, at least for normal, average, medium class family members, because if or maybe 10 to 15 years of your annual income, okay, 10 or 15 years of annual income. For example, if you're earning 100,000 a year, you should have at least 1 million or 1.5 million of sum assured for your life insurance, but also depends on your financial obligation. The one we need to study in more detail in other situation. Then this one is a critical illness. So critical illness, maybe at least 500,000 or maybe 3 to 5 years of your annual income, depends on your intended lifestyle after recovery. So these are the things that you need to understand from your current policy, that we highly recommend you to look into your policy. If you're not very sure what kind of coverage that you have, you may call your agents, or try to understand from the policy. And also this another very important issue is, who are your nominees? Many people, they bought life insurance or insurance maybe 5 or 10 years ago. That was the time maybe they are still single. Then after they got married, they didn't change the nomination. So this is a very crucial time for you to change nomination. Later, I will touch a little bit on the impact of having a proper nomination for your policy. Right? You've got to make sure whether your policy is properly nominated to the people that you intended to give to. Right? And many more things. Right? So these are the things that is advisable during this MCO period. Go and take a look at your policy. All right. When anything happens, it will be too late already. Right? Insurance is something that once it's happened, then you cannot be undone already. You cannot go back and do, oh, I wanted to buy, but actually, if any sickness happen, then you cannot buy anymore. Right? So this is a very important point. Next, now, if those who wanted to buy insurance now, during this MCO, it is not advisable by government to meet up physically. So that's why this industry, it used to be, what do you call that? You must meet up to sign an application. But now, during MCO, okay, government also allowed agents to go and meet up with clients without physical contact, not meet up to have policy application without physical contact. I'm not sure if you're aware of it. Maybe your agent already contacted you about this. It's okay. Just let me briefly run through what is actually we mean by this. Okay. Yes, you can apply insurance, life insurance, through this non-F2F, non-face-to-face. You can just sign and take a selfie of your own IC. The detail, we leave it to your agents to handle for it. But yes, you can, if you want to top up your policy now during MCO, yes, you can do it. Okay. Next, no need to wait until MCO is lifted. All right. Don't wait until MCO is being lifted, because we do not know whether MCO will be extended further. Right. So you keep waiting, and if anything happens during this period of time, then it will be a big issue and big trouble. Right. So it's never try to wait if you need to top up your policy. Then also, once your case is enforced, if you were to buy medical plan, so once your policy is enforced already, so the company is going to waive the waiting period of 30 days. Right? If after you enforce a policy, you need to wait for 30 days before you can use the medical card. But for COVID-19 case, actually you can skip the 30 days. Right? Once enforced already, even touch wood, kena COVID-19 and you need to be quarantined, you need to be sent to a hospital, then the medical card will be covered. All right, it's only for MCO during period and also for COVID-19. All right, other sickness, no. Next, if pass away due to COVID-19, you still can claim upon death, right? So someone, if you are a breadwinner, so you need to leave a legacy for your family members, for them to continue living. So people will be worried. So one of my group here, we have one, not COVID-19, but also what do you call it? Lung infection. The doctor prescribed as lung infection. Now this gentleman, he is a breadwinner. He went to I don't want to mention a place that is a what do you call it? Somewhere up the hill one. So he went there, all right, came back within 1 week time. Within 1 week time, he is being sent to ICU. And then 1 week time, stay in ICU, and then after that, immediately pass away. Like that one. But it's also due to lung infections, but not COVID-19. So these kind of things might happen. The family will be facing a lot of issues as well, right? So that's why you need to get yourself covered, even if anything really, really bad happens. So during this MCO, you still can do something to protect your family members. Okay. So you may also sometimes you may also consider some non-underwriting policies during this MCO period, because it's very hard for agents or yourself to go and do medical checkup, or even you want to go to hospital and get your medical record. Right? So these are the things that you can do it during this period of time. You may also consider non-underwriting policies. If you're healthy, of course, you can apply any policy, normal insurance policy, without any medical checkup, without going to get medical record from the hospital. Now, if you are not healthy, you have some medical records, for example, diabetes, heart attack, even cancer before. All right, so these are the sickness that it will not be accepted. All right, so you can also opt for policies without medical underwriting. Nowadays, there are some policies, some insurance company, they are offering some policies which is specifically designed for people who are not healthy, right? But some got promotion period. All right, so within this period of time, you are able to get this policy, then you are covered regardless of your medical records. So these are the things that you may also want to look into it if you're not healthy. If you're healthy, of course, by all means, go for the normal insurance policy. All right, next. The third topic that we'll cover is, will my insurance cover me for COVID-19? Currently, I'm not sure if you are aware that what are the policies that is being covered for your COVID-19. Some people might also want to try to understand this. Now you see, for medical card, there are a lot of exclusions, So there are almost 2 pages of exclusion. Now this exclusion, one of the exclusions for your medical card, actually generally, you see, any communicable diseases required quarantine by law. This is under exclusion, which is if the government asks you to be quarantined, by right, this medical card cannot be covered. No. They don't pay for your expenses, medical expenses during the quarantine period. This is by law. No. Right? This is under exclusion. Okay. But then now this exclusion is being waived. Most insurers already waived this exclusion, which means even you are being quarantined by law, you need to stay in the hospital, right? The medical card also will be covered. So most insurers already waived this exclusion. Okay.
Okay, that's good news.
Okay. Okay, next. All right, so basically, what are the policies that is covering your COVID-19? Now, if for the medical, just now we already mentioned, under quarantine by law, by right, it's supposed to be an exclusion previously, but this one already waived for COVID-19. Okay, for your critical illness, they will still cover for 24 hours worldwide, wherever you go, whatever time. So once diagnosed of critical illness might not be directly related to COVID-19, also will be covered. You can claim as usual. And even your life insurance of TBD, you still can be covered 24/7 and worldwide, and still can claim as per usual. And even accident, let's say you fall down or you hurt yourself or pass away due to some accident, okay, so still covered, right, as per normal. So don't worry about these COVID-19 issues. So you will be covered for these benefits. Yeah, mostly I cannot represent all insurance company, but most of the insurance company are giving this kind of benefits. Next, now your current situation is most of all COVID-19 patients are to be sent to GH, right? So, but some people before they go to GH, they will go to clinic for checkup, or maybe if doctors suspect, then they will send you to GH. And also, so the charges incurred in the private hospital, if you went to private hospital first, right? So if they do some diagnostics check or checkup or whatever, or confirm, then you need to be quarantined, need to send to GH for admission. Then this a little bit of charges, not much, it's a little bit only, right? So you'll be covered. That is called pre-hospitalization benefit. Another one is when you are admitted to GH, right? There is a daily allowance from your medical card, so it will be paid also according to how many days in your stay in the GH. This is also covered. It's a daily allowance. Not necessarily 50 ringgit. Some people bought it. Maybe some package has 60, 80, 70, something like that. So the current situation is this: because COVID-19, basically you do not need to pay a lot of medical expenses, right? So it will be treated in GH. Next, another benefits that the government is asking the insurance company to do is that they have already started a 8 million fund, okay, from insurance company and also some Liam or Liam. So this COVID-19 test, I'm not sure if you heard about it. This is actually a 8 million fund. Once it's exhausted, then no more. All right. So what you can do with this, if you are having your medical, your individual policy, it's an individual policy with group medical card and also individual medical card. All right. So health insurance policy, Takafu certificates includes your medical expenses plan, hospital and surgical plan, hospital income plans, and critical illness or dread disease plan, and other similar insurance. All this, if you are the customer of any one of these insurance company, then you can claim this 300 ringgit for the test, okay, to do a test. Maybe the test is cost you 600 or 700 ringgit, but then from this 8 million, you can claim about 300 ringgit per individual. But one time only, regardless if you have 10 insurance policy, also you claim for one time only. So this one must be referred by doctor, registered doctors. You cannot simply go and say, oh, I want to test this and then want to claim 300 ringgit. No, all right. So you must be referred by registered doctor for this COVID test. Next, your insurance policy or Takafu certificate must be enforced as of 27th of March, right? Which means on this date, starting from this date onwards, your policy must be enforced. Or in the future, maybe you want to do the test maybe in May or June or whatever, suspected, all right? Then also you can claim for this 300 ringgit. This is the COVID-19 test fund, or CTF. Right? This one you can get from many websites, all right? So I'm not going to touch in more detail how to apply all these things. Yeah, so I'm not going to touch on that. And also, beside that, okay, beside whatever that we have mentioned earlier, which is your medical card, the COVID-19 test fund, this is something extra that your insurance company will offer to you, to the policy holders, right? So all the insurance company, they have this kind of extra benefits to be offered for COVID-19 issues. Now, you see, example, just one example, because different company has different benefits. I'm just showing you one of the example of one insurance company. Now, this company will pay a 20,000 payout upon death. All right. So let's say on top of your existing benefit, okay, additional 20,000 to pay out upon death. Now, this is also a good time for you to buy this kind of insurance policy, because once you become their customer, they will pay this 20,000. Okay. Next. Also, this insurance company will pay a cash assistance of 200 ringgit per day up to 60 days of hospitalization, for example. Okay. So there are different company has different benefits. All right. So this is only one of them. So 200 ringgit, let's say if hospitalized for 20 days, then you will get 4,000, something like that, cash assistance. Okay. And this package also can be offered to policyholder. Let's say you are the policyholder of this insurance company, you can also be extended to your family members, your spouse and children. Okay, they will be also entitled, even though they are not the customer of this insurance company. This is just one of the examples. Huh? Okay. Next, My Salam. My Salam also is a national health protection scheme. So My Salam, I think you're mostly heard of it. So this is for age 18 to 65. And also for B40, you'll be entitled for 4,000 if diagnosed of critical illness. If diagnosed of critical illness. For M40, you'll be paid for 8,000. And also the last day of registration already over, which is March 31st, 2020. So that's why before this date, many people ask you to register for this My Salam. It's good to register because this is something extra. You do not need to fork out any single cent from your pocket, and also then you'll be able to enjoy this benefit. Okay. And My Salam also give you a hospitalization income replacement of 50 ringgit per day for up to 14 days. Okay. So existing My Salam benefits that covers COVID-19 as well. So this is for critical illness, And also eligibility for registered B40 and M40 Malaysians. You need me to explain this B40 and M40? No,
I
right?
think most people don't know it, right?
Most people don't know or already know.
I think most people know it, right?
Oh, okay. Just a brief one. B40 is below 40. That means if Malaysians have 100% of different income, so the below 40%. M40 is medium 40%, and also there's another group called T20, top 20.
Yeah, top 20 will get nothing, right?
Top 30 you will not get anything. All right.
Okay.
So the period is ongoing until the fund is exhausted. There are around 2 billion of funds in this My Salam. All right. Next, another hot topic during MCO or something new, which is called deferment of premium payment. This is called DPP. That is proposed by government. What is this actually? Deferment of payment, which means if you are affected, your income is affected. All right, you do not have enough income to pay for your insurance premium. So what you can do is government will already ask insurance company to allow you to defer your premium for 3 months. All right, let's say now is what? April, May, June. So you can defer this 3 months premium. Okay, so 3 months deferment doesn't mean it's not a waiver of premium. It's not that you do not need to pay. At the 4th month, let's say now is April, May, June, you request for this DPP. Okay, the company, this one need to apply one. Insurance company say, okay lah, I allow you because you have fulfilled certain criteria. For example, your income is affected. All these things you need to prove to insurance company. Okay, I really cannot afford to pay for this premium. 3 months. Okay, so insurance company grant you, okay, you can defer your premium for 3 months. But the problem is when come to the 4th month, you need to pay back in lump sum. Let's say 1 month you are paying 200, 200, 200, so total 600. So on the 4th month, you need to pay the 4th month premium of 200 plus whatever outstanding, another 600. So then it will depends on individual. All right. So it is not a waiver of premium. So that don't get this wrong. So you need to pay back in lump sum after 3 months to avoid policy lapsation. Now, this is very good for those people who just bought policy. If you just bought policy recently, maybe within 1 year, right? So your policy do not have cash value. So if really your income is affected, so you may opt for this option. Okay, but it's not really advisable because after 3 months you need to pay back all. Okay, what other alternative? Casey Lau, you want to ask something?
Yeah, so essentially what that means is that if you don't have cash value in your policy, so if you don't pay for 3 months, normally you don't pay for 1 month, the policy will lapse already, right?
Correct.
But now you don't pay for 3 months, but insurance company will not lapse your policy. That means you still have coverage.
Correct.
Okay.
But 4th month, you need to pay back all.
Unless you already have like cash value, like some investment policy, you already have money in there.
Yes,
so if
correct.
you don't pay back that 3 months, that's fine, right?
Yeah. So this is what I'm going to share with you next, which is what other alternative, what other options do I have if my income is really affected now? All right. Now, provided you have cash value in your policy, there are cash value in your policy. Let's say your policy already more than 3 years, 5 years, 7 years, or 10 years. So actually, you do not. It's not advisable to take up the DPP, the deferment of premium payment that I mentioned just now, the 3 months one. No need. Actually, no need, because the policy itself already have factored in this kind of benefits in your policy. No worries. So you need to check whether your policy, first of all, whether your policy, is it a traditional plan or is it an investment linked plan? So if it is a traditional plan, okay, you can just stop payment for 3 months or 4 months or 5 months, whatever it is. If there is a cash value in your policy, insurance company will loan you automatic premium loan. Okay, but depends on insurance companies. Some companies, they may not allow this APL. So it depends on what kind of companies that you are buying from. Doesn't matter. So this is APL, automatic premium loan, which means insurance company will use their own fund to loan it to you to continue your premium. This is automatic premium loan. If you stop your payment, let's say you are paying by credit card every month, 200, 200, 200, then you say, okay, these 3 months I really cannot tahan, or the next 6 months I really cannot tahan. Okay, then you can ask your agent to change from credit card to cash. Once it's cash already, they stop deducting from your credit card. So what you can do is, insurance company will continue to loan you, automatic loan you. Okay, of course, if it is loan, so they will charge a little bit of interest, but not much. Depends on insurance company. So automatic premium loan, they will allow you to continue the protection, the coverage, without paying the premium for a short term or period. So what you can do is, later on when your income is okay, come back again, then you can continue, you can pay back the loan, but on a progressive period also can. No need to pay lump sum. So these are the options that you can actually exercise in your traditional plan, APL. The next option is ETA, extended term insurance. Now, if you think that, okay, I do not want to pay anymore, any future premium I do not want to pay already because I'm worried about my future income, so you can opt for this extended term assurance. So during this extended term assurance, which means initially, let's say it's covered until age 87. Now you said, okay, with my cash value, I can convert my policy into ETA. So the company can allow you to convert. Maybe instead of cover until 87 years old, they will cover you until 50 years old. If you think that you only need the coverage until 50 years old, right? Same protection, only shorten the tenure. Another option that you
no
can
longer paying premium.
no need
no
to
longer
pay
paying premium also. Okay.
Forever.
Okay.
Forever, okay. But all other benefits no more. For example, if you have critical illness, maybe only convert into term policy, just a term policy.
Okay.
All right. Next, you can also exercise another thing called paid up. So paid up policy is you reduce your sum assured. For example, initially your coverage is 100,000. So you say, okay, I don't want to pay already. My income got problem. I cannot do it. So okay, forever I don't want to pay already. So what you can do is you can ask for paid up. So paid up is initially 100,000. You can reduce to maybe 20,000, convert it, and then it will cover you until 87 as well. All right. So basically, your traditional plan, you can do this. All right. Next, this is much more flexible. Investment link. So investment link, very simple. There's one exercise actually you can do it. It's called premium holiday. Let your premium enjoy holiday. Okay. So for those people who do not, who think that your income is affected and you do not have the ability to continue to pay for a short term or period, you can exercise this. How to exercise this? You can just stop your credit card deduction. Then after that, your cash value in the policy will continue to take care of the coverage, and then your policy will not lapse. These are the options that you can exercise instead of picking up the DPP, right? So it's not so advisable for those policies already have a lot of cash value. So you can actually have these kind of options. Okay, next.
Hey Chong,
Yes.
about the option just now. So the traditional plan, just to clear up, this one, the option 2 and option 3, it is not reversible, right? Once you convert to this, you cannot turn it back to the ordinary.
It's not reversible, and all other benefits will be gone.
Okay, so but if you want to remain, I think APL will be the
APL
best choice.
will be best choice, but depends on individual. Some people think that some people They say, oh, I kena COVID already. I might die within a short period of time, but I don't know when. So I convert to ETA. So I still get the same coverage, but shorten the tenure. I think I'm going to go within short period of time. So at least you do not need to continue the pay premium. Or even some people say, that, oh, I gonna cancel already. I might not be survived through for a long period of time. So let me convert to ETA. I stop my payment and I still get the same coverage, only that I shorten the tenure. So it depends on individual.
Okay, good, makes sense.
Right, let's move on. Now, in short, so this is the table for you to follow, just a brief one. Right, so what are the benefits? Your own medical card, insurance or insurance company provided by your existing cover for private hospital medical bills. So this is just a snapshot, just in short. Okay, next. Now, can I get insurance services online? So actually, nowadays, most of the insurance company, they will have these online services already. So what you can do is you just contact your agent saying that, okay, how to register. So different insurance has different way. So because now during MCO, many insurance companies already scaled down their manpower to about 20% of their workforce. So many physical forms will be delayed. Even you want to submit any changes in your policy, you ask your agent to send you the form, then you fill out the form and post. Even the postage is also a challenge now, right? So you want to post it and then send to insurance company. Insurance company also scale down. They do not have so many people, and only those essential services in insurance company are allowed to continue working. For example, claims, guarantee letter, and even renewal. Only these essential services. Other things, maybe it will delay. All right. So what you can do is it's advisable to take this opportunity to register your insurance into your online portal. Different insurance company has different benefits, and this is just some of the example. So for customers viewing, if you can view, let's say you do not need to contact your agents and you want to know what kind of benefits that is inside your policy. Actually, you can log in to the insurance company portal. So you have policy number, types of policy, either protection, medical, saving, or whatever, commencement date of your policy. Then you will know when is your policy started, and also current cash value and investment fund. You can also have this kind of information on the portal. It's very useful and very helpful. And who are your nominees as well. So you also know who are your nominees, right? It's stated very clearly there, who are your nominees, and also your current address and phone number, and many, many more information that you can view online by yourself, right? No need to call your agents, no need to call insurance company. Okay. Next, some transactions you can also carry out. For example, fund switching, ILP fund switching, investment linked fund switching. You can download your insurance statement. All right, for those who want to declare your income tax, okay, no need to call your agent. Your agent, you can log into your portal and then you just download your insurance statement for income tax. You can even change your signature. Depends on insurance companies. Some company allow this, some company does not allow that. Okay, so change of signature or change of payment frequency. Last time maybe you pay by yearly. Now you want to change to monthly. Also, you can do it. Change method, payment method. Last time you pay by credit card. Now you want to change to cash. Also can. These are the things that you can do. Right? You can transact, and many more transactions that can be performed online. So it's very advisable now during this MCO to do most of the policies review or policy checking on your insurance company portal, right? So go and register for it. Your agent will be able to assist you how to do it. But some online services that you cannot do. It's not that insurance company does not allow. It is Bank Negara that doesn't allow. Right. So these are the online services that you cannot do online. Okay. For example, absolute assignment, change of nomination. Now this one, appointment or nomination or change of nomination, you cannot do online because it has some legal issues. All right. So that's why change of nomination, no choice, have to be hard copy at this moment. But also some people are asking for Bank Negara's approval during this MCO. If I want to change my nomination, I can still do so online, right? It's advisable to do so, but at this moment, no approval yet. And also withdrawal of fund or surrender of policy, reinstatement of policy, and any other services related to your benefits or beneficiaries of the policy, or even policy loan. These are the services that you cannot perform online. Okay, so this one you need physical form. All right, so we come to the final part of my sharing. Now, many people are not sure of their nomination. So this one I also covered in the previous webinar, I think a few years ago. But this one, let me briefly run through again because this is really important. Okay, for your nomination. Now, many people before marriage or after marriage or even any kind of situation, they have nominated a different person, which is not recognized by the law. So that's why they have a lot of implication. Now, let me briefly share with you, when you take out your policy, it's important to understand who are your nominees. Okay, the best is check from the online portal. Okay, because you might have already changed the nomination from time to time where you cannot see from your physical policy. So that's why it's good to check on the portal. Whatever is registered in the system, it is the nominees that you are appointing. Now, check your nomination. Nomination is very important. Make sure your nomination is updated and reflect your current intention. Okay? Maybe you have done your nomination 10 years ago, 20 years ago, you forgot to change it. Now it's good to change, to review and take it out and change. But as I've said, you cannot do it online. You have to print out a form and submit to insurance company and post it there, right? Next, this is what I want to say is a trust policy and a non-trust policy. So if you do a nomination, trust policy is when you are still single, you nominate your parents. This is considered a trust policy. And when you are already married, you can only appoint your spouse and children as your nominee. All right, this is considered a trust policy. Whereas for non-trust policy, if you're already married and you still give to your parent and you still nominate your parent, this is a non-trust policy. And even others, if you want to give to your siblings, your boyfriend, girlfriend, even your fiance or good friends, whatever. So these are all non-trust. Only this group of people are considered trust policy. Now, what is the implication of trust policy? If a person passes away with a trust policy, that means your policy money, let's say you buy a 1 million policy, comes to your family members, the money is creditor proof. This is very powerful. It's creditor proof, which means money, the 1 million money comes to this group of people, is considered creditor proof, which means even though you owe other people's money or owe the bank or whatever financial institution, any loan, this money do not need to be used to pay all your loans. Okay, very powerful, very important because it is meant for your family members. And another implication is that no duty to distribute. Now, if it is a non-trust policy, when your family members receive this 1 million, they need to distribute back to your spouses and children. Then it will create a lot of confusion and a lot of dispute within the family members. So the implications of a non-trust policy is it is not creditor proof. Any of your creditors or any of your bank loan or whatever come to get this money, claim this money from you, from this group of people, they have to take it out. So it will create a lot of dispute and confusion. So let's say you have a boyfriend, girlfriend 10 years ago, you nominate them, okay, you please enjoy this benefit because I love you, you love me. Okay, 1 million pop, I have already bought a policy, 1 million to your girlfriend. Then after that, you didn't get married. Okay, that is considered non-trust. So when you pass away, your boyfriend or girlfriend get this 1 million, whatever creditors that you have, they can actually claim from this boyfriend, girlfriend. It is not creditor proof. And also, let's say this boyfriend, girlfriend, when they receive this 1 million, they thought it's very happy, it's meant for them. Actually, it's not. When they receive this money, they have to pay back to your parents if you are single, and even if you are married, they have to give it back to your spouse and children. So these are the things that you need to look really seriously, because some policy you already bought it 10 or 20 years ago, you might have already forgotten who you nominated to. So anything happens, then koyak already. Troublesome. All right, this is protected by Financial Services Act 2013, 2013. Right, it is stated here, notwithstanding any written law to the contrary, a payment under subparagraph, spouse or children, or if you are single, then your parent is considered trust policy, shall not form part of the estate of the deceased policy owner or be subject to his debts. You see, there's a law that is protecting this clause, this group of benefit. All right, so I think we are about time, so I'm not going to touch on this topic. This is something extra. It's good to know, but it's not related so much on this MCO. So I just want to touch a little bit here, just a point. Actually, I have a lot of details at the back, but due to time constraint. So I will cover this. Now, MCO is a very good opportunity for life insurance industry to shift from what? To shift from transactional based kind of services. For example, you ask your agent, hey, please help me to print my income tax statement. Actually, you can do this on your own already, right? So it's good that you do it so that you can control everything better. So actually, the whole industry is going to shift from the transactional based services to what? More on advisory based service. It means your advice, your consultation is more valuable compared to these transactional based kind of services. So it's good because it's MCO, so you cannot meet up face to face. So let the industry and let the customer and let the agents have a transitional period, a paradigm shift from this transactional based to advisory. So actually insurance agent can play a better role in giving advisory role and consultation role rather than drive a car, give you a form, sign, and then bring back. So this is very transactional based and it's not really not making a business, what do you call it? Not so economical, right? So, all right, so I do not want to extend further. So I will end my session here. So I leave the sessions back to Casey Lau. Thank you.
Yep, great. Thank you, Casey Chong. So before we go to the Q&A session, I think you have a survey you want them to submit, right?
Correct.
Can
Yes,
you like
correct.
show the link to them? Yeah.
This is the link. Okay, for those participants today, we are giving you a complimentary life insurance review session if you want to. So you may type in this link and then link to the questionnaire. So in the questionnaire, you can type some questions. You can answer some questions there and related to insurance or whatever service that you think you want to get. All right, so we will guide you on how to do it and see what you can do during this MCO. All right, so because it's not advisable to meet up with agents. So if your agent is very active, very good in service, then you may contact them, no worries. But if you need us to do some revision or whatever, or check on your information or your policy, then we give some advice and calculate how much that you need for your protection. You may also answer this survey. So from there, we can communicate further. All right, so do drop us email or handphone or through WhatsApp or click on this link, caseylau.com/insurancemco.
Yep, great. I post that link in the chat box. You can check it out. I just click that. If you are interested in like reviewing your policy with the team from Casey Chong's office, SAC Wealth Management Sdn Bhd.
Yeah,
I used to be I used to be one member of as a member of SAC Wealth. Of course, I moved to the US now, so I'm no longer with them. So thank you very much.
Yeah.
And if you have any question, can use the Q&A box to type in your question. We have some coming in already. So this is the first one from Son. If I go to private hospital to do the COVID-19 swab test, can I claim it using my insurance coverage?
What kind of insurance? Your medical insurance?
I guess.
If you have medical insurance, if you're not admitted, you just on voluntary basis, you go and do a swab test at the private hospital. So this is not covered, not covered. But if it is instructed by doctors, if you are referred by doctor, then you can claim the 300 ringgit, the COVID test fund, the 300 ringgit. But for your own medical card, if you do not, later on, after you have done the test, you're found negative, and then you are not admitted to hospital, no, this one no. Otherwise, insurance company will be bankrupt. Everyone go to private hospital and do the test, then it will be very difficult for them to claim. Only unless you are instructed or referred by the registered doctors, then you can claim from the COVID test fund, 300 ringgit. Your medical card, no.
Okay. Yeah, that's clear. So CH want to know, is anything outside investment link policy considered traditional policy? So anything not in investment link is considered traditional, like endowment, whole life, term, everything.
Yes, correct. Yeah.
Okay, good. We answer this one. Another one from Son. If I have a will written, which one will get the insurance payment if something happened to me? The nominee from my will or the nominee from my insurance?
Oh, good question. Because your insurance will prevail. Your insurance nomination, if you nominate A to be your nominee in your insurance policy, but in your will, you put B to benefit from your insurance. So the insurance nomination will supersede your will nomination.
There are some complicated issue when logically when you insurance money it will pay out first, right? It's
Yes.
regardless of your will. So whether you have a will or not, the insurance money will pay out first. So
Correct.
if it is a trust policy, then no problem, the people will get it, right?
Yes.
But if it is a non-trust policy, so the nominee who got the money, let's say your pastime girlfriend or boyfriend,
Yes.
so she got the money and then she has to distribute it according to the will, I guess.
Yeah, this is the second part of it. Sorry, I missed out to tell. Now, if it is a non-trust policy, you nominated, like what Casey Lau said, if you nominated your girlfriend, boyfriend, so, and in your will also, you said, okay, I want to give to my wife. So then when your girlfriend receives this money, they have to pay back according to your will, if it is a non-trust policy.
Okay, yeah, I think that's clear. So for non-trust policy, single nominate sibling. So if the single person passed away and the parents have already passed away too, so does the sibling has any duty to distribute? Who to distribute?
Now, this one depends on the executor. If you have a will, then your executor will have to decide on it. And if it depends, I have another session with Casey Lau. You may refer back to that webinar, because it's very complicated, because I do not know the actual situation. Normally, it's this: when the siblings, when they receive this money, if let's say you nominate someone and then nominee also pass away, so the whole insurance money will fall under estate. So it will be distributed according to your will. If there's a will, if no will, then go according to the Distribution Act.
Yeah, so it's according to the Distribution Act. So basically, if this guy is single, no immediate family, only sibling, so I guess sibling will be getting that, right?
Correct.
Okay.
Because siblings is also part of the Distribution Act beneficiary.
Distribution Act, right?
If they cannot
so
find,
first goes to wife and children, right? Like the spouse and children, and then the second goes to parents, right? Then the third will be like sibling, I guess.
Okay. Parent in Distribution Act, your parent, you will get 1/4, your spouse will get 1/4, your children will get half.
1/2.
Equally share. Yeah. So this is the nomination. But if no spouse, no children, only parent, and the parent also passed away already, so then they will look for another category, maybe your siblings, and then only they give to the siblings.
Yeah. So Amy, he's asking, she's single, so she has no parents. Parents pass away.
Yeah.
So how should she do the insurance nomination? So who should she nominate?
Okay, since there's no more parents, okay, and not married and single, so your money you can do. Let's say you want to benefit someone, your siblings or your friends or whatever. So you can do assignment. You can do assignment, right? There's another document that you can do assignment. Then from the assignment itself, depends on what kind of assignment that you do. There are two types of assignment. One is conditional assignment. One is absolute assignment. All right. So your conditional assignment will only take effect upon death. But if you do absolute assignment, it will take effect immediately. That means the whole policy, you are transferring the ownership to that person already. So that will definitely let the assignee receive the money, the insurance policy. Absolutely. Something like you transfer your ownership to the customer. So it depends on your situation.
I guess in Emmy's situation, she will not have to, let's say she has no dependents, so she will not be worried about taking care of somebody else's finances except hers. So in this case, I think she will buy all the policy that is living assurance, right?
Yes,
critical
exactly.
illness, those
Critical
kind of
illness,
stuff.
medical.
But it's still covered death, because if you skip all those things and then you die, the money still pay out to somebody.
Correct.
Then does she have to worry about who to give to, or maybe she has somebody in mind, and then she can put like the will and the insurance also the same name, then there will be no dispute, right?
Can.
Then you don't have to do assignment, because when you want to undo the assignment, you need people to sign too, right?
Correct. But this, if you distribute your insurance money through will, then you will go through all the probate process, all the estate. That means all your asset will be frozen. Then from there, you need to pay debts. You need to settle your debts. Okay.
But she can still nominate the person. Yeah, I guess that there are pros and cons, right?
Yes.
So if you nominate someone who is not naturally a beneficiary,
yes,
it will still fall into your estate. But
correct.
at least that guy will get the money first
Yeah.
to do whatever he wants on your estate.
Yeah.
I guess.
When you nominate someone, let's say you nominate your friend, still can do. It's just that it's not trust policy. So when your friend receives this money, they will help you to settle all your debts, settle all your execution costs, all the administration costs, whatever thing you pay first. Then the balance you give. See if there's a will. If there's a will, you follow the will to distribute to them. If no will, then follow Distribution Act.
So any nomination will still be better than no nomination, I guess.
Yeah. At least the insurance company know who to pay to.
If not, they cannot issue the check. They just keep the check to themselves, right?
Correct. Yes, it's just that the nomination is not a trust policy.
Okay.
Still subject to that. Yeah.
So there are more questions coming in. If I have bought travel insurance but cannot travel now, can I ask for a refund? Can I cancel it?
Cancel the travel insurance or cancel the
travel insurance?
Cancel the travel insurance. Once you have already paid, depends on different companies, because this one is under general insurance. So travel insurance mostly are general insurance. So depends on companies. Some companies allow you to refund. Some company maybe they will extend your coverage, or some companies will not be able to refund. Yeah. So it depends on which insurance company that you bought from.
Okay, Ming Chen want to know, what's the purpose of having a nominee in your policy? So can I shortly answer this? I guess if you put the name in the nomination, that means when insurance company they receive your death cert, right? They are going to pay out that money.
Yes.
And they have someone in the nomination to pay that out.
Yes.
They can issue the check. So this is a short answer, but the long answer will be like trust policy and the non-trust policy.
It's a little bit confusing, or even a little bit complicated, because all these questions will lead to many situations. So all these different situations need to be dealt with individually. So basically, yes, nomination is to allow the insurance company know who to pay to upon the death of this life assured.
Okay, good. How do we know the policy is a trust policy? So is there a like insurance company, will they label it, and so we know?
Yeah, I think in your insurance portal, I think if you can log in online, so some insurance company, they will state this is a trust policy, this is a non-trust policy. And also the best is you check with your insurance company lah. Or the best is, let's say when you do the nomination, you remember if maybe 10 years ago you do the nomination, whether you are still married, you are already married or single. So if it is single, so you already nominated your parents, then it's considered a trust policy. Your trust policy will not be changed even after you get married. Let's say when you are single, you nominated your parent as a nominee 10 years ago. Then maybe 5 years ago you get married. So even though after you get married, the previous nomination still prevail, still take effect on, even though after you get married. Yeah.
Good. So it's at the point of time when you set up that nomination, right?
Yes, correct.
So some people are confused about trust policy and insurance trust. So actually there are two different things, right? Can you roughly just explain? No, these are two different things.
Okay. Now, trust policy are related to what we are saying today. Now, this trust policy is actually protected by law under Financial Services Act. So there's an act stated this trust of policy money, whatever payment out, this is considered a trust policy, right? Let's say, like what we said just now, if you nominate your spouse and children, that is considered trust policy. If you nominate your parent when you're single, also consider a trust policy. So this is protected by law. Okay, this is what we call a trust policy. It will not form part of your estate. Now, whereas Another type is called insurance trust. Insurance trust is, let's say you buy a 1 million insurance policy. So upon death, you set up a trust, an insurance trust. So you transfer the ownership of this 1 million into a trust corporation. For example, whatever trust corporation that you have, you can transfer the ownership of this 1 million policy into the trust corporation. Now, upon death of this person, so the money will go to the trustee. So the trustee will keep this 1 million and pay your beneficiary according to your trust deed. That means, let's say you want your family or your young children to receive 1,000 ringgit every month. So the trust corporation will help you to distribute 1,000 every month instead of pay the lump sum of 1 million to your children, for example, to maintain their living, to maintain their tuition, to maintain their standard of living. So that is insurance trust. It's different from this trust policy. This is already built in. It's whenever you buy a policy, if you do the proper nomination, it's considered a trust policy. This one no need to do anything, just do the nomination. The insurance trust, you need to pay, you need to let the insurance trust company to help you to draft out a trust deed. And then you spell out your instruction there.
Great. So in short, is that if you buy one policy and then you nominate it correctly, then this policy becomes trust policy. So it's just one document, right?
Yes.
So if you are buying an insurance policy and then you do another trust, so there are two documents here. This is trust, this is insurance, and you assign this insurance to the trust, it become insurance trust, because this combination called insurance trust, right?
Yes.
So this is the short explanation. Okay. Great, thank you. And Lily said, I have a whole life policy and now wish to delete, I guess she want to cancel delete one of my beneficiary. Say, I have a whole life policy, I want to delete one of the beneficiary. So my agent informs that the consent of that beneficiary is needed. Is that true?
Okay. Different insurance company has different practices sometimes. And some insurance company depends on when you bought the policy. If it is before this act, 2013, you have actually already appointed. Let me go to the. Okay, where is it? Okay. Now, according to this act, Financial Services Act, if you have bought the policy before the implementation of the act, all right, you might have already appointed yourself as a trustee. So when you appointed yourself as a trustee, you can change your nominee anytime. Okay, let's say you said, okay, I want to appoint my father lah. I want to appoint my father as a nominee. All right. The policy that you bought before this date, all right, you can appoint yourself as a trustee. So whenever you want to change the nominee, you can do so without seeking advice or consent from your father. After this date, after the implementation of this act, I don't know the exact date already, forgot already. I think it's 30th of June. Starting this implementation. Now, if you bought policy after this date, you cannot appoint yourself as a trustee. What you can do is you have to appoint another person to be a trustee. So if you do not appoint another person to be the trustee, you will appoint automatically your first beneficiary or your beneficiary will become the trustee. So when you want to change your father to your husband, for example, so you need your father's consent because he is the trustee of the policy. Yes. So it depends on when did you buy the policy and when did you do the nomination. So I cannot directly answer your question. Yes, if you bought the policy after this date, then you cannot change the nominee without the nominee's consent. You must get the consent of your father, for example. I'm not sure if it is too confusing. The cutoff point is the implementation of this act.
Yep. So if before that date you do a nomination and the nomination is done correctly, putting yourself as a trustee, then
Yes.
you don't need their consent because you can decide on their behalf.
Yes. Correct.
So if not, then if after this 2013
30th of
act,
June, I can't recall the act.
then you cannot do this already. You have to really get their consent.
You cannot change your nominee as you wish. You must get your consent.
Yeah. Hey, Casey, John, we have some issue with your form. So some of the attendee here is
Form? What kind of
saying
form?
that the Google form you're putting up, it is I don't know how you change it.
I put up a
it's
form.
it's editable. So you might want to make it not editable, but I don't know how you can do that. Yes, so that means when they go there, they can edit that form.
Oh, really?
Yeah.
Okay.
So let me see. How do I do that?
Maybe you help me to send.
I'm not sure.
It's okay. For those who are interested, you may drop an email to Casey Lau or what.
Okay. Let me see. So it's supposed to be the other link. Okay, let me update that.
I sent you the wrong link.
It's not supposed to be this link. Okay, let me see.
Sorry.
I'll change it for you.
Okay.
So can you see the Q&A box? Can you put up a Q&A box that you can see the other question that is unanswered? Then we can get to that. So in that case, if your agent say that you will need the consent, that means of course agent, they want to make the job easy. If it doesn't require that consent, they will not tell you. So
Yeah.
I guess it's the insurance company that required that consent. Then of course you have to get that consent. So what's your suggestion for the person if you are having difficulty getting the consent? What do you do?
Okay, this is quite a common concern in the market. So some insurance company, they allow the policyholder to change the trustee first. You can remove the trustee without getting the trustee consent. So once you remove the trustee, you put another person to be the trustee, then you can remove the nominee that you do not intend to. You want to delete the earlier nominees? Yes, you can. You go and you ask your insurance company whether they can allow you to change the nominee, change the trustee, because there are two type of role here. One is trustee, one is your nominee. So you change the trustee first. If you cannot change, if you cannot change your nominee without their consent, then you can change the trustee first. Once you change the trustee, you can change the nominee already. I'm not sure if you get what I mean.
Oh, so how do we can appoint a new trustee in
Yes,
that case?
you can.
As a
some
policy
insurance
owner?
company allow you to change the trustee without the trustee consent.
Okay.
Okay,
good. So the form I changed the link already, so this link should work already.
Oh, thank you.
So let me see.
Is it a loophole in the Financial Services Act? Meaning the trustee? You mean you must get consent to change the nominee, right? Is that what you mean? Is it a loophole in the Financial Services Act? CH, changing trustee to change nominee. Depends on, because actually, legally you can change any trustee, because you appoint someone to be a trustee. You say, oh, I'm not satisfied with this trustee, then I can change the trustee. Without the trustee consent. You actually can. Even though now if you appoint, let's say, a trust corporation to be your trustee, some company can, some company cannot, as I mentioned just now. So it depends on your company, your insurance company.
Okay, good. Okay, good. So let's take two more questions. I'm trying to solve your form issue. So the link will be, the link now is okay. So just use that link I paste in the for you guys, kcl.com/insurance MCO. So you want to enter information that is safe now. So Louisa want to know if I have nominated my sister for my insurance. So should I die, will my sister receive that proceeds without going through probate?
Because if it is a siblings, it's considered non-trust. It's considered non-trust. So that means whatever money that pay out, the death benefit, I'm only referring to death benefit. For critical illness, it will be paid directly to the life assured. Okay, this one is death benefit. So death benefit only you have trust and non-trust policy. So for non-trust policy, if you nominate your sister as the nominee, so it's considered a non-trust policy. So when your sister receive this amount of money, let's say 300,000 death benefit. So this 300,000, in the letter from insurance company, they will tell your sister that you are only an executor of this money. You are not the beneficiary of this money. All right. So when your sister received this 300,000 of death benefit, she needs to keep this money. She cannot use it for herself. She needs to keep this money. If any of your creditors come and claim the money from your sister, she has to pay these creditors from the 300,000. Right? And any balance, if no one come and claim and all your estate settled already, no one come and claim any loan or any debts from your sister, then she also has a duty to distribute the money to whoever that fall under the trust policy or follow your will. If you still have your parents, so your sister need to give this 300,000 to your parent. This is how it works. So they are just acting like an executor. They are not the beneficiary.
Okay, so if you want to contribute to the charity using your insurance policy, can we do? Should we do absolute assignment?
Yes, that's more advisable to do so.
Okay, great.
You do absolute assignment to the organization.
Okay, Ellie want to know, my children are below 18, so how can I ensure that they receive the money in the event that I die? For will, I believe it is also 18 plus. So that means when your children is minor, they will get the money, but they actually didn't control the money, right? So it's controlled by the trustee in your will.
No, because in your policy, in your insurance policy, you will also not appoint someone to be your trustee. If there is an elder, if there's a what do you call it, an adult who is your trustee of your policy, all right? So this adult will hold on trust. Let's say 300,000 money comes to you nominated your children below 18, so to receive this 300,000, but because they are minor, below 18, so you also appointed a trustee in your policy. So the trustee, let's say he or she is an adult, so the money will go to the trustee. The trustee will hold on trust first until your children reach 18 years old. Your trustee will transfer the money to this to your children.
Okay, great. So
sorry, one more thing. If you are afraid that your trustee will misuse the fund, you can also, like what Casey Lau mentioned just now, you can set up an insurance trust. So you transfer the 300,000 life policy into the insurance trust, and when the the trust corporation receive your 300,000, you can give instruction to the trust corporation that, okay, every month pay to my children, to my young children, until they reach maybe 25 years old. Then you can maintain their living without the lump sum of money being misused by someone that you cannot trust. Or even you can trust them, they might not be able to manage the fund so properly for your children. Then this is the time when you need insurance trust.
Okay, great answer. So thank you everybody for keep posting your questions. So we are running out of time, so we cannot answer every question here. And if you want to have further interaction with Casey Chong, you can go to my Facebook page, and there's a post that I post this live stream. I didn't make it on Facebook, but I will make it on YouTube just now. But the post is in Facebook. So you search that post, you ask your question over there, and Casey Chong will try to answer you. I don't know he's committed to do that or not. But if you have time, Casey Chong, please go in there and help to, because everybody have your own different situation. So
Yes.
and then if you want to talk more in private and a PNC format, so I guess the best way is to fill up the form. Now the form is okay already. I make it private, so even I also cannot access the form already. So Casey Chong,
Thank you,
you
Albert,
are the only person who can add that. Yes.
I think Albert is the one
thank you.
who brought up.
Yes, a few of them who brought up, alert us about this information.
Thank you.
Thank you very much. So it's safe to put your information there now.
Yes,
and then you can talk privately with Casey Chong. So since he's working from home right now, so he has plenty of time to do Zoom with you if you can schedule it. So
actually,
thank you, everybody.
I'm more busy than MCO before MCO.
Do more, right?
I need to cook. I need to prepare food.
Need
to go out and buy groceries. Groceries. So these are the things
there are no services that you can buy anymore, right?
We can order some delivery, food delivery or whatever. It's very convenient now. I mean, now people slowly get used to it.
Yeah. we will have another Chinese session on 2 p.m. today. 2 o'clock. So Ian will be hosting that. And then if you want to come back and ask more questions during that time, you can check on that session. So thank you very much. And,
thank you. Thanks
everybody,
for your participation.
Stay home, stay safe, save lives. Thank you very much. Bye-bye.
Bye-bye.